Hello, welcome to public sector accounting class. And for this course, we will be going through 10 modules and we will take it one after the other. That means we'll have 10 videos talking about each of the module. And today we'll be talking about introduction to public sector accounting. We need to quickly get the basic understanding of what public sector accounting is, and that is why we need to be introduced to it. We will look into the definitions, the nature, the scope, and of public sector accounting. We'll also look into the difference between public and private sector accounting. We will look into the objectives and importance of public sector accounting, and we will look at the users of public sector financial information. What is public sector accounting? We say public sector accounting is a specialized branch of accounting for recording, analyzing, and reporting the financial transaction of government and public sector entities. It can also be seen as the process of recording, summarizing, analyzing, interpreting, and communicating government financial statements and statistics in aggregate and detailed form. Also, it is the accounting basis concepts, the standards adopted by governments and public institutions to ensure transparency, accountability, and comparability of financial information. I want you to note those three keywords: transparency, accountability, and comparability. And it is the system of recording and reporting financial transactions of government ministries, departments, and agencies in a manner that ensure public accountability and achievement of budgetary objectives. And you see, just like I said, the core focus is the management of fund. And this is to ensure that there is accountability, there is transparency, and that resources are efficiently put to use. And it's not just about profits, and that is what public sector accounting is really saying. It's not just about profits, but about stewardship and public good. And looking at the nature and the scope of public sector accounting, the nature we can also derive the key characteristics from it. So the nature of public sector accounting refers to the fundamental characteristic, the principles and operational features that distinguish it from private sector accounting. And when we talk about this, we look at it in the aspect of non-profit orientation. That means PSA, which is public sector accounting, is non-profit oriented and it takes service delivery over profit. Also, looking at the legal and regulatory framework, it is governed by law and constitution. Another is the budget center system, which talks about the budget is the foundation of control. And then the use of fund accounting, it deals with the use of fund accounting system where resources are separated for specific purposes. For example, we talk about the education fund, the health fund, infrastructural fund, and some other as such. And it's also characterized by multiple stakeholders, and this talks about it serving as a wide range of users. It has wide range of users, as we will talk about it towards the later part of this that we are dealing with. As per the scope of public sector accounting encompasses all activities, the processes and institutions involved in the management of public finances. And these include the budgeting and control, the revenue collection, the expenditure management, the financial reporting, and the auditing and accountability. What are the differences between public and private sector accounting? We look at it based on the objective, the orientation, the source of fund, regulatory framework, accounting basis, and budget. As per the primary objective, the public sector has a primary objective of accountability and service, providing accountability and also providing services to the masses. For private sector, it's actually made for profit orientation, like it's made to maximize profits. As per the orientation, the public sector is non-profit oriented, while the private sector is profit oriented. For the source of fund, the source of fund for taxes, I mean for public sectors are taxes, grants, loans, and some others. And for private sector, they can source for their funds through the sales of goods and services, owners' capital, and some other as such. For the regulatory framework under the public sector, it is governed by the law and constitution, while the private sector is governed by the corporate law and the International Financial Reporting Standard, IFRS. And we talk about the accounting basis. When we talk about this for public sector, it's actually cash and basis. For the private sector, it's an accrual basis, on accrual basis, which is as part of the IFRS. And the budget, it's legally binding under public sector, and it's internal management too under private sector. We have the objective of public sector accounting in terms of to ensure accountability and stewardship, as we've been talking about, also to provide reliable information for decision making. And that is why we talk in the definition that it's a means of communicating or interpreting what has been gathered, summarized to the users of such accounts. So it's for decision making. And the next is to ensure legal and regulatory compliance, also to facilitate budgetary control and performance evaluation. It's also to provide a basis for auditing and public scrutiny, which brings about transparency and accountability, as we are talking about, and also to safeguard public assets from loss and misuse, and lastly, to promote transparency and public confidence. You have the importance, which is to ensure good governance is being put into practice, also to promote fiscal discipline, and this is to prevent misuse of and enforces budgetary limits, also to reduce corruption, to facilitate international comparability, to aid it aids economic planning, and lastly, it builds public trust. PSA builds public trust. And getting to the users of public sector financial information, we have two types of users. We have the internal users and we have the external users. When we talk about the internal users, they are within the government, and we have the likes of the management and accounting officers who are for planning and control. We have the ministers or the commissioners who are for oversight and reporting. We have the budget officers who are for formulation and forecasting, and we have the internal auditor who serves as a personnel, a user for compliance check. And this and more are the users of public sector financial information. And when we talk about the external users, which are the outside governments, we have the legislatures, we have the public and taxpayers, like us, the taxpayers, and then we have the auditor general. We also have the donor and creditor as the users. The key quality of useful financial information: for financial reports to be effective, they must actually have the following qualities. The first is being relevant, that is meeting the decision-making needs of users. Also, it must be reliable, talking about the accurate and free from bias. It also must be comparable, which talks about consistent across periods and entity. There must not be any variation, it must be consistent. And also it must be understandable, which talks about being clear and well structured. It must also be timely, which talks about available when needed. And lastly, it must be transparent. It talks about disclosing of all significant facts. In conclusion, public sector accounting is fundamental to transparent and accountable government, and it is distinct from private sector accounting in its objective, its rules, and focus. Its core purpose is the stewardship of public funds and not profit making. A wide range of stakeholders rely on its information for decision making and oversight, just like we've seen. And understanding this foundational issue is crucial for exploring budgeting, um, international public sector accounting standard, and also auditing in the future modules. We'll be looking at it. Thank you for listening.